Good to see everybody. Okay, so time for the Thursday webinar. I want to cover a couple of topics that have certainly been on my mind this week, which I think will be really important for us to just refresh on. This is going to be a short and sweet webinar, just a couple of things to discuss. And then we will get on with our Thursday evening. But I'd love to hear you guys' thoughts, participation, comments, everything. Don't hesitate. But we're going to talk about some real important stuff. At least I think it's real important. So let me show my screen here and do a couple of things. Oh, Jim, 60 in Eureka. I know, all my Southern California people are telling me it's all the Orange County folk are saying it's like 70. Kara, you're out there, right? You're in Newport.
Yeah, I am, but this week I'm up in Park City.
Hey,
so I'm in your heat. It's very hot.
It is a roaster out here. I don't know what's going on, but Utah is so hot. All my Huntington Beach buddies are all saying it's like 70 and it's nice. And yeah, something's cooking. Something's happening. But
so it's usually, Jared, it's usually not this hot this time of year up here.
Since I have been here, I feel like the summers have been kind of intense, but usually like 90s is about where it gets up here. Salt Lake, I was in Salt Lake last night. It was like 102 at like 7 p.m. And I just feel heat coming off the ground. And I think I'm getting too old for like anything above like 85. I just sweat makes me uncomfortable. But yeah, it's not supposed to be that hot. Actually, so when we remodeled this house, we bought this house, it needed some serious TLC. We did a major remodel on it and it didn't have an air conditioner. So we had to put in some like central AC when we did the remodel like 2 years ago. And I thought, how do people live out here? But everyone said, never got that hot. You never needed it. And now it's real hot. So, I think it's just the typical heating up, planet is getting a little warmer by the moment. So yeah, it's nuts. It is nuts. All right. Okay, can everyone see my screen okay?
Yeah. Yes.
Good. Okay, guys. Okay. 84 in Austin. That sounds pretty good, Ron. All right, so we're going to talk about a couple of things real quick. I want to talk about market cycles. By the way, guys, I think it is very, don't judge me. I think it is very important. If any of you listen to audiobooks, I'm listening to a great book. I don't actually know how to read anymore, but I can listen with the best of them. And I have been listening on, yes, Carlos, you're with me. I actually tried to sit and read a book the other day and I swear I went cross-eyed. It's just craziness. But I'm listening to this wonderful book by Howard Marks, the famed hedge fund manager who's still hedge funding his way to riches. But it's called, what's it called? Mastering the Market Cycles. And it's really been such a funny, interestingly timed situation. Let me just get that title. Yeah, Mastering the Market Cycles, Market Cycle. And that's Howard Marks. Anyways, he just kind of talks about all the things that, that he has lived through as an investor, as a hedge fund manager since, the 60s, right? And all the big contributing things of the dot-com and of course the late 70s and the early 80s and then of course 2008. And it's just interesting to kind of put some of those things into perspective and kind of see how these market cycles continue to repeat themselves over and over again. So super interesting. And it kind of was a good timely topic as we're seeing some of our stocks pull back and I mean, nothing is pulling back to a degree that that I'm concerned, but it kind of just sparked the thought in my head about identifying these market cycles. And, when you look at a chart like this and you think, here's an hourly chart and we think, okay, this is the official definition of a downtrend, right? We're making lower highs and lower lows And, are we making a new lower low, right? Are we in a downtrend? And maybe, it's possible. But we always want to kind of keep an eye on these cycles. And so I want to talk about, how these movements look and how they go. And again, just real quick, some of our best strategies to trade some of this stuff. So when we look over here at, long-term charts, one of my favorite things to kind of keep in mind when we're looking at these long-term charts is exactly what it is we're looking at, right? So does everybody see this chart right here? And can you see how, of course, Alcoa and so many of these other stocks, Alcoa is just my favorite stock ever. It's just any chance we get to buy this thing. It seems to be the most resilient stock on the planet. But if you look at this little stage right here, right? And we have to kind of look at that and say, well, what is this, right? We've had certainly some bigger highs over here. And oh my goodness, come on, mouse, work with me here. We've had some bigger highs over here and some certainly bigger highs, back in some of those levels. But, we're down at this low, we're down kind of at this little area here, and we're putting in these, we're putting in these big double bottoms and that kind of stuff. But, what is this phase right here? And I talked about this in a webinar not too terribly long ago. And this is Wyckoff, right? Who was in on this webinar? I think I talked about it maybe 3 or 4 or 5 months ago, but Wyckoff was this, famous investor and famous, market pattern kind of person here. And it's interesting how often these things tend to play out, right? And this is such an interesting, this is Wyckoff's whole thesis of all things market cycle related, right? We get kind of this phase of a big downturn in a stock, in a market, in anything, right? And then we get this real sideways, start to find channels and start to find support. And this doesn't do a very good job at listing, the biggest thing that he talks about, right? The accumulation phase, right? And I think every stock that we're in is currently in the accumulation phase, which is why we're in these stocks in the first place, because I think they're in this accumulation phase of this part of the cycle, right? We're in this part of the cycle of literally every stock that we own this moment. And this part of the cycle is obviously the best place to be. Now, we might be here in some of them, we might be here in some of them, but we're in this area, right? And we're looking for that completion of, essentially the right side of this movement that we've already seen on the left side, right? And none of the stocks that we're in have even started on the right side of this movement, have started this getting out of that accumulation phase and working its way back up. And so as I look at everything, we look over here, this is that exact example, right? We look at Alcoa and every other stock, US Steel and all of our energy stocks and all of our banking stocks all look the exact same, right? We get this phase here and, and this is what we're waiting for over here, right? And that's what, we have to trust in a little bit that we're in the right stocks that are able to do this. And B, we have to know how to best manage and best handle our positions. So when we look at stocks that are doing this kind of thing, like all of our stocks are doing, right now, and of course we can look at, X and see the same kind of thing, right? Big highs over here, consolidation. Are we going back like that, right? This big long-term U shape, right? And that's just, that's just across the board. It's just everywhere. And so, CLF, and of course, we see this in all of our energy stocks and just everywhere, right? We have these big highs, and some of these have had, longer term downtrends, and some of them have more time in this accumulation, consolidation phase than others. And it does take a catalyst to get out of that accumulation consolidation phase. It takes a catalyst of, something, right? What's going to drive oil higher? What's going to drive oil stocks higher? What are the pieces that need to be in place for that to happen? But that is something that we'll continue to discuss as we go. I don't want to get too much on track for that. I want people to just think about this picture and think about how often we see this kind of thing happening and this kind of a thing playing out. And the fact that, once again, literally every stock that we own is in some form of this, right? We may see things, in that consolidation period for longer and that accumulation period for longer, but everything is in that accumulation period. I wouldn't even say that too many of them have really broken out of that accumulation period. So we're looking for the catalyst that is going to push these stocks out of this accumulation period into this big run up. But I want everybody to think about what you feel when you're trading. And this is the interesting part. This is the stuff that I love. What is everybody, when we're looking at this stuff, when we ride out this kind of movement here, right? What do you guys think when stocks pull back? When we see little bits of pullbacks here, like we've seen on everything that we're trading, right? What is the first kind of thought that comes to your mind? I'm super interested to hear what people, what's the first thing you think when a stock that you're in goes down?
Holy cow.
Thanks, Sharon. Yes. Holy cow. Like, what in the world?
Or I just think that went down because I got in it. It's me. It's going the wrong way because I'm in it.
Yes. That one is my favorite, right? Like we all need to go in together on this and say, okay, who usually makes a stock go the opposite direction, and let's split the money. I'll go long, you go short, whatever. So yes, these are very common things to think. Anybody else? Any other thoughts you want to? Mel says, yeah, opportunity. Good. Sherry, yeah, excellent.
I just
What
wonder
else,
how
guys?
much further down it's going.
Say that again, Lee.
I just wonder how much further down it's going.
Yes.
I'm hoping for a new low sometime so that there's a better opportunity for buying stock.
Yes, absolutely. And Mary says the same thing. How far is it going to go? Yeah. So some of you guys that have been in the group for a longer time, and some that are newer, you guys know that I am such a fan of the market doing the thing that people least want to see happen, because we have to get a little bit on the other side of market psychology, right? We've got to get from the reactive side to the proactive side, right? And pretty much everybody that trades that has a Robinhood account, right? It's so much reactive trading, and reactive trading is very, very difficult to consistently do profitably, right? And so going back to some of these pictures, I want everyone to kind of burn this in their brain. Can you guys see this right here? Can everyone see that screenshot? We all,
Yeah. Yes, I see that.
Good. So this was just one of many that's out there, but this is kind of that very common type of emotion, and this is nothing that none of you guys or that nobody's seen before, right? We've all seen this, we've all heard this, but it is such an important reminder right now, especially this week as we've seen things pulling back, and we've had some discussions about things, and I had that, I did kind of that Tuesday evening webinar where I said, let's keep dry powder, man. Let's be ready to buy some of these dips, right? Because this is kind of the common thing that we see happen quite a bit, where everything's up and everyone's excited, right? And then things start to go down a little bit, and the first feeling we have is a little bit of fear, right? Some of the things you guys have said and posted there, how far is it going to go? How low is it going to go, right? That's kind of our fear-based response of, am I going to get a margin call? And, is my stock going to go to zero? Like, is this the end of the world? And this is why I always joke about it, right? I say traders can handle one down day, maybe two. But if you get 3 down days, we're done. The zombie apocalypse is happening, hunker down, folks. And so if we can start to identify this within ourselves and say, okay, I understand when everything's up and everyone feels fine, then that's one part of the cycle, right? And when things start going down and people start to panic, right? This whole kind of fear, and you kind of get this capitulation, right? Where people say, oh, I get it, I was wrong. And I bought my stock at 25 bucks. I'm going to sell it at $18. I'll just take the loss. It's fine. And usually when there's enough fear and enough capitulation and enough surrendering, as they say here, that's usually a pretty solid sign of the bottom, right? That's a pretty good signal that things are done going down and they're ready to go back up again. So I want everybody to notice, this is why I always say that trading has ruined my life. Anything I hear anybody say ever, immediately I go, nope, that's wrong. And then I have to think about it. I go, oh no, that's actually probably right. It's a great point. But it's just a natural reaction at this point to do opposite of what I hear or what is being talked about around me, because I have gotten so ingrained in trading. My whole life, I've basically been a trader. And so you get to this point where you start to become very, very sensitive to what is happening around you. And you've got to check yourself constantly to make sure that your emotions are not the emotions of those around you, right? In trading, I'm talking about specifically. So when there starts to be a little bit of fear in the market, when you start to feel that tightness, you start to feel that little pit in your stomach, that little bit of anxiety of, am I on the wrong side of this thing? It's not to say we ride every movement out and so on and so forth. We've got to have risk management that goes along with all of this, but we've got to notice that feeling. We've got to notice that tension there. And as long as this goes all the way back to the very beginning, right? Of we go into something with a very clear picture of what needs to happen. And those very clear pictures include buying things at as good of prices as we can and continuing to drive our cost basis down by selling options and knowing what the big picture is and being able to afford what we're doing and actually want to be in what we're in. If those things are all the case, then as we see stocks turn down, this is why I get excited, because I go, oh man, I love these stocks. Every stock that we're in, I love to death. And I think every stock that we're in is going to, in a worst case scenario, quadruple, right? Quadruple. So if I see a dip in the stocks that we're in and people start to get a little fearful and a little uneasy and how low are these things going to go, these are all points that we need to be aware of, but we need to be looking at these things as opportunities. Do you guys, case in point, everybody has probably experienced planet Earth a little bit over the last few weeks. And I'm assuming this is pretty similar to in most places in the country. I think we only have a few people in here outside of the US. And I don't know what it's like outside of the US right now, but I know what it's like inside the US. And I know I can't buy anything. I can't do anything. I can't go anywhere, right? I can't get a hotel anywhere. I tried to take my wife for her birthday and get a hotel. I can't get a hotel anywhere. I can't get into a restaurant anywhere. I can't do anything, right? Everybody is in such a buying frenzy right now that you cannot get anything. And everybody is doing everything. And so you can't go places. Everything's like sold out and just going nuts, at least where I am. And I'm assuming it's, like that in a lot of places. And so I look at that and I think to myself, okay, why is that all happening? And that is herd mentality, right? People are buying houses because people are buying houses, right? How does the economy work in the first place? Everybody does something because everybody's doing something, right? So we all buy houses, we all buy stuff, we all go on vacations, and then it becomes very expensive to go on vacations and very expensive to buy houses and very expensive to do stuff because everybody's doing it. And then when people start to get spooked, everybody holds on to their money and we go into a recession literally immediately, right? Because everybody starts to hold on to their money. Somebody gets spooked and somebody else gets spooked. And then it spreads like wildfire. Everybody holds on to their money. The US, the economy goes into recession and it's just like that. Why does it go into recession? For no real reason. Then people are worried about the state of the economy. we as human beings can spend our way out of recessions. The governments have to end up doing it because we're too afraid to. We can, but we don't. And so this is the herd mentality. And if we can get on the other side of that herd mentality as traders, we will find and see and create the best opportunities in the market possible. We just have to notice that primal feeling we get of either overconfidence or fear. And we have to check that with what we see happening, right? When we get overconfident in the market, I'm making money every day, my account's going higher every day. We need to be aware of that. And when we also see stocks are going down, things are dipping, we need to be aware of that. And we need to basically take whatever predominant feeling we're having and be prepared to do the opposite, right? I always tell people if trading feels uncomfortable, if it feels a little out of the norm, if it feels like you're doing something that's not natural and maybe not even right, then you're on the right track. Because if you're doing what feels right in trading, you will lose money every time, 100% of the time. And that just comes to these emotional, like these herd emotions, and it comes to these cycles, right? These cycles in people, cycles in markets, cycles in everything. So if we can start to learn to identify, number one, these emotions, these feelings, these are going to go very much lockstep with the market. And then if we can learn to, where's my other one? If we can learn to have this ingrained in our head right here, the Wyckoff price cycle, just as an example, if you can have that just burned into your memory, those two things alone will keep you on the right side of the market as often as humanly possible. Not every time. We're going to make mistakes. Markets are going to do unexpected things. There's nothing 100% predictable out there. But if we can notice those emotions and the big pattern, we're going to be in business. We're going to be in super good business. So questions, comments, thoughts. Let's see here. Yes, Peggy, that's a good point. Yeah. Oh, Lebanon has no electricity, running water. Good grief. Yeah, Peggy says, after a few wins with our system, that emotion, that anxiety gets less and less. And that's absolutely true. That's the reason I trade the way that I do, because it makes it as easy as possible to ignore those scary feelings, right? If we have a credit spread and the market's going down, awesome. We're going to own stock at a lower price. If we own stock and the market's going down, we'll keep selling options against it until we bring that cost basis down and until the stock starts going back up again. That easy. It's really that easy. Yes. Yeah. Good, Aris. Yeah. Okay. What do you guys think? Does anything coming up for anybody? Any questions, comments, thoughts about that? I want to cover a few more things real quick and then we'll wrap it up. Lee, you're the only live video I see right now. What do you think? Is that?
It makes sense to me, yes.
Kara, there's Kara. All right. Anybody, what do you guys, everyone feeling good?
It's nice to go over this because I feel like when you have a bigger picture and know what you're doing, it's not as scary. It's like, because you have a plan. You have a long-term plan. Yes.
It's, I mean, look at it as like you're looking at a map. And, if you're trying to get to this location here and you're way over here, and at some point in this journey, you're going this way, that for this part of it, that feels terrible, right? But if you know the big picture and you know the map and you know that there's a huge mountain right here and you have to go this way to get there, then it helps keep that perspective, right? It helps keep us from, okay, I'm off track, something's wrong. Whatever trade I've done is it's killing me, it's going against me. And we just have to look at it as, number one, the typical ebbs and flows of the market. But number two, you're right. When we have that big picture, it will help us rest easy. And it helps us just, this is stuff that has played out for as long as the stock market has existed, right? We're just in a little portion of the stock market, and for as long as it's existed, these kinds of things have happened. Sometimes they go longer, sometimes they go shorter, but it's just in almost a boring way, it's the same thing over and over again. And once we start to get that big picture of it all, you know, it takes the worry, it takes the stress, it takes, you know, so much of that out.
One thing to bear in mind is that when the stock starts moving even down, the ID rank of the stock will typically go up. Then you can sell covered calls for higher premium.
That's a good point, Aris.
So that's the flip side. And that's why you see Tom Sosnoff today giddy. Yeah, the market is down.
What was he
was so happy. Oh my God, he was so happy in the morning to see the market crashing. Then in the afternoon, his giddiness went a little bit more in check. Nah, it's not that good.
Yes, I share his sentiment of
He's
giddiness.
a billionaire, so
yeah, so he's okay, but
yeah.
I share his giddiness, and I love when the market goes down. I love when the market goes down because it is such an opportunity for us. It's such an opportunity. Chris says, how do we identify that the upswing is an upswing and not a little blip and then down? Chris, that's a good point. And there's a lot that's involved in that, right? There's a lot. We've had some big, long discussions about why we're trading the stocks that we're trading. And, you know, and that was kind of last week's discussion, right? Of why we are picking the stocks that we're picking. And that is going to give us the context of, you know, why these are dips in a longer, bigger uptrend instead of these are upswings in a longer, bigger downtrend, right? So that whole discussion last week really was what covered that, right? And so that's, you know, that's the reason that I feel like I feel like opportunities to buy these dips will be so crucial. And, you know, honestly, you can almost just go back and say, you know, we have to look at a chart. We have to know a little bit of basic technical analysis, right? We have to look at a chart and say, okay, where are we in the grand scheme of things? You know, where is this chart? You know, what are we seeing? What's happening? So on, right? We have to know that for sure. But at the same token, we almost have to say, what is the predominant emotion I'm feeling right now? You know, am I feeling panicked? Am I feeling worried? If I am, probably a lot of other people are. And what will that mean for the future price of a stock, right? So, you know, if you use emotion as almost kind of a counter trend, as a contrarian indicator, that's probably a pretty good one. But just looking at typical charts, typical things that we see here, you know, APA, for example, big oil stock. Two reasons I like APA. Number one, long-term downtrend that appears to have bottomed out. We have a long, big falling wedge, number one. Number two, if inflation is going to be an issue, then oil and commodities will continue to run up. And if those do, our oil stocks and our energy stocks are going to kill it. And that's what I'm betting on. I might be wrong, but that's what I'm betting on.
According to the bond market, though, it looks like inflation is not a concern in the immediate future.
Yes, and that is highly contested at this point. But yes, the bond market bonds are rallying and yields are down. And so everyone's going, nope, it's all okay. It's all okay.
It can switch overnight.
It can definitely switch overnight. We got a lot of bond buyers out there. We've got a lot of repositioning. China is probably picking up another trill while they're at it, you know, but the bond market, yeah, that's why everyone is so at oppositions on this inflation deal. Is the bond market right, or is the bond market going to be wrong about this? I don't know. That's the big question for sure. But okay, so a couple of things to look at. So now, as we start to identify these trends, we start to keep ourselves in check. We make sure that we understand what we're seeing, what's happening, what's going on. When that is the case, I just want to remind everybody, just start looking at some of this stuff, right? And say to yourselves, if I own stock in APA, if I own stock in X, in CLF, in any of these, we want to look at this big picture. Let's look at X for just a minute here. If I own stock here, and this is, this is pulling back and it's doing whatever it's doing, I just want to remind everybody, we can, as X is in this, big consolidation and accumulation period, as it's dipping, X is off this double top right here, off this high by a little bit, right? We made it up to, well, it made it all the way up to just about $30, and it's down to about 22 and change, 22 and a half. This is not the time we want to be trying to sell covered calls. This is where we're looking for opportunities down up here, in this region here. We want to put on some bearish stuff, right? We're starting to come off this high. We're coming off this double top right here, like this. We're coming off that. Put a covered call here, down in this region here. All very good. We're now getting into this consolidation period. We're getting into some bigger volumes, some bigger consolidation, some bigger stuff is happening here. And if we put this into a little bit of bigger context of volume, right, of this stuff over here, this is still a pretty heavy volume period. Now we have some a big volume chunk between about $21 and about $24. Heavy volume, right, in that area, right? So we're kind of in the lower portion of this, right there, right? We're kind of in the lower portion of that volume. There's still pretty heavy volume all through there, but we're in the lower portion of this big volume period. And so as we're down in these areas, up against these highs and up against, some of the bigger levels, we're looking for covered calls. Down here, we're looking for bullish put spreads, naked puts, long calls, right? This is the stuff that we want to really be kind of watching for as the dips happen. Covered calls are going to be okay in certain situations at these lows if we can go out far enough and if our break even's really low and we can get a good enough premium, right? You could sell a covered call down here if you can sell a $26 strike, let's say, or a $25 strike and make enough money on it, and you have a low enough break even in the first place that you wouldn't be sad at all losing the stock at $25, right? But we don't want to do that any more than we absolutely have to. What we want to be looking for down here is the hardest time to pull the trigger is when the market is falling and when we're in the middle of a dip. And that's the most important time to do it. The most important time to do it. I will be first to admit that it is still hard for me, and I will miss plenty of opportunities, as you guys will see in the future, to buy every single dip. There's some dips that I go, I'm going to wait on this one a little bit. This one, I'm going to let this, show me that it's done dipping. And confirmation's good. We like confirmation. We don't want to, get bullish on every single pullback that ever happens. We got to make sure that, that we're hitting some support and that there's reason for the market to bounce a little bit, but we want to make sure that we're on the right side of this movement, right? Covered calls against the highs, bullish put spreads, naked puts, long calls against the lows. That's what we need to be doing. And of course, buying more stock as well. But we need to make sure that we're not trying to sell covered calls a bunch at the bottom. And when things get higher and we're going, this is just going to keep going higher, and I'm going to sell a bullish put spread at the high for a cost basis lowering. Now, it's okay to sell a bullish put spread at a high if we're trying to get into a stock, because we're going, I really want to get into this thing. It's, it's running against some resistance. It's far away from moving averages. Probably it'll pull back some. Our bullish put spread's great for that. But we don't want to try to be lowering our cost basis against a resistance level after a big rally or after a big run up by using one of these lower methods, right? This is stuff to use on dips, and this is what we use on rallies, right? When the market goes up, sell covered calls. When it goes down, sell put spreads, naked puts, buy long calls. So just a few simple points. That's all I want to say. A few simple points to keep in mind. These are the methodologies. that we're going to use to deal with these kinds of markets. And at the same time, we need to make sure that we are keeping that emotional side in check and that we know what our big picture is and how markets tend to play out. Honestly, markets are so exciting because things happen in different ways, but they're kind of boring at the same time because they just do the same thing over and over again. All we do is forget. That's our job as human beings. We forget what the market has done. We forget history. We forget all of that stuff. And we are so good at that. We're just amazing at that, especially as traders. We have a bad week and man, it's lights out. And so we forget what markets do, but they just do the same thing over and over again. So as long as we're clear on how we manage our positions, which is this, and then that emotional side of things and the big picture, the rest of it's easy. I have no need to be stressed out or anxious about trades that I'm in. If I know that if I really have anxiety about a trade I'm in, then I'm probably doing something wrong, right? I probably tried to buy a call option at a high. I probably tried to go opposite of these basic things that we just do over and over and over again. So Dom says, slightly different take on history. If it doesn't repeat itself, it certainly does rhyme. Yes, I love that. That's also, that was the Mark Twain saying that nobody can confirm if he said or not, right? Yeah, I love it. I love it. Yes, that is for sure, Dom. When we forget, that's how secrets are kept. Absolutely. And that's how the stock market, remember, stock trading, trading the markets is so difficult because we're always trading against ourselves. Most everything that we do is counterintuitive and counter to our emotions. We have become so wonderfully in tune with our emotions these days, and everybody's talking about your truth and your light and your excellency and all this stuff, right? And how we should really trust ourselves, which I agree, we should. But trading is going to present an exercise in emotional fortitude, right? Where we say, okay, is that feeling I'm feeling just fear, or is that my intuition, right? Most of the time in the market, it's going to be just fear. And so we've got to recognize that for what it is. And we can't let fear interrupt with our process. And so that's the biggest thing that we have to keep in check. Okay, I won't keep you guys forever. That's all I have to say. I will stop my screen and give you guys a couple of moments. Feel free to turn the, Dan, my man, good to see you. Nice to have you with us. Any thoughts, any questions? Lenny, you're actually sitting at the Golden Gate Bridge. It's a it's a great look. I love it. Okay, any thoughts, anything anybody wants to share?
Looks like the gentleman's club.
Yeah, where did all of our ladies go? We have quite a few wonderful women in this group, and they're all nobody.
How to do my video? It won't work.
Oh, darn it! Listen,
I'd love to do that and talk and stuff, but
yeah, if we don't have Zoom issues, what do we have? Zoom works for me 50% of the time consistently. So I hear you. I hear you.
but I'm here listening.
Good. Okay. Any thoughts, comments, questions? Anybody? Anything you guys want to share, add, ask about? Okay. All right. If everybody feels good about that, let's all breathe it in. Let's come back to Attack the Market tomorrow. We got some good stuff in the works that I'm excited to discuss tomorrow morning for our members trading session. So I'll see you guys there. But thanks, guys. Good to see everybody. Have a wonderful Thursday. I hope this was helpful. Honestly, this stuff is so stinking important. It is so important. And it all has to do with ourselves, right? It has to do with just keeping those emotions and keeping the process clear, keeping things in front of us, and we're good to go. So let's do it. I know we all can, and I will do my best to help guide you guys through the process. I've been through it many times myself, and it's a fun one. So let's hang in there. Keep up the good work, everybody. We'll see you guys for the live trading session tomorrow, and have a wonderful Thursday. Take care, guys. Wonderful.
Thanks. Thank you, Jared. Have a good night.
Yes. Good to see you guys. Good to see everyone.